Funding Month, presented with Oracle for Startups and American Express, recognizes the stories, lessons learned, and best practices shared by founders and funders around the world.
Okay, so thank you for joining. Welcome to Startup Grind. So I'm Kazuki, a regular host at Startup Grind. So the theme of this month is Funding Month, as you can see. So presented with Oracle for Startups and the American Express. So recognizes the stories, lessons learned, and the best practices shared by founders and funders around the world. So as funding is a critical and essential part to be developed to the development of the strategy. So our session this month will be focused on gaining funding within Japan, in addition to regular fireside chat. So for this topic, we are excited to welcome Jordan Fisher. I will introduce him properly later on. So Jordan is the co-founder and CEO of Zehitomo, Japan's premier marketplace for local services, which provides a platform where customers can make highly customized requests and service professionals can follow through with highly tailored solutions. So in this fireside chat, we will be discussing the Japanese startup ecosystem, how startups prepare themselves to find funding within Japanese market. So he will be sharing his experiences, the challenges, and the opportunities that are available for the startups within Japan. So for the first 10 minutes, I will introduce tonight's guest, Jordan Fisher, and let him introduce himself and his business. Then we have a fireside chat about 35 to 40 minutes. Then we're going to have Q&A session. So if you have any questions, so please post your questions on Q&A box, which is the right side of your screen. So please post a question anytime during the session. So I will pick up some questions in Q&A session at the end. Right. Yeah, again, I'm Kazuki, the guest host for this event. And tonight's guest is Jordan Fisher, the co-founder of Zehitomo. So Jordan is passionate about problem solving, productivity. He previously worked at JP Morgan in Japan. So first as a programmer and project manager, then later in equities as a sales trader. So he has a lifelong interest in Japan and AI. And after working in finance, he co-founded Zehitomo to bring local services online and help them become more productive. So first of all, can I ask you, Jordan, to introduce yourself and your business?
Sure. Yeah. No. Thank you, Kazuki, for the kind introduction. I must say your profile picture just there on that screen is very different hairstyle from on this evening. Is that your Corona cut or?
Yeah, that was like 5 years ago, and when I was working for like a consulting firm. So yeah.
Cool. No, almost
now like more like a startup style.
same glasses though, I noticed.
Yeah.
Awesome. So yeah, thanks for holding this session. Good evening, everyone, in Tokyo time zone at least. Looking forward to kind of sharing my experiences of co-founding Zehitomo in Japan, and especially I think via the theme of navigating fundraising in Japan, I can talk a little bit more about the fundraising process, the experiences that we've had. And maybe just as way of self-introduction, I will just give a very brief overview here, of our business, where we are. So we've raised actually close to 1.5 billion Japanese yen, or like around 14 million US to date, mostly from early to mid-stage investors based in Japan. We're around 65 people right now. Myself and my co-founder, James, are both foreigners, despite launching a business here in Japan. So that makes us a little bit unique, and that's given us our share of kind of things that we can talk about later in terms of strengths and weaknesses compared to the market. And we have, a number of investors, some that I've highlighted here on the slide. Coral Capital, our 500 startups, was our first initial kind of seed investor that led us through Series A, followed by Digital Garage Ventures that led us in our Series B last year to kind of where we are right now. And we have a handful of kind of corporate investors, a handful of angels that, on our cap table that aren't listed here. And so I can kind of talk about the different stages that we've been through so far, as well as, different expectations along the way. So I won't go into too much detail on our business. I don't think that's the point of tonight, but I'll just give a very high level understanding of kind of the problem space that we're in. And as many of you know, like Japan is one of the best places to live in the world, in my biased view. That said, it's also incredibly inefficient, right? And so Japan's productivity has been the lowest among G7 for decades now, driven by the services sector. So Japan is no longer really a country of manufacturing, but a country of services. And you have, 99.7% of the, businesses here are classified as small, medium-sized businesses. And their number one challenge is kind of getting new leads to grow their business. So, we launched Zehitomo as a marketplace for local services. You can kind of imagine across needing a plumber to a personal trainer to a photographer, several hundred different types of services that we offer nationwide across all of Japan. And maybe put more simply, it's kind of like the Yellow Pages 3.0. I think in all across the world is one of the largest consumer sectors yet to come online. We've been tackling this in Japan as a lead gen platform. Imagining more of the Amazon of services, right, compared with maybe a Shopify of services and meeting somewhere in between. So 3.0 today, looking to be more of the Yellow Pages 5.0 as we build out. We still have a long way ahead of us. But it's a very large market. Again, as large as food in Japan, it's larger than e-commerce in Japan. And despite being a few $100 billion just in Japan, it's only a couple % online. So a lot of opportunity for a lot of businesses to kind of grow and help kind of transition this market online. We use kind of an algorithmic approach to kind of helping professionals grow their business and help them kind of bid on jobs and requests that come in automatically. This has kind of been our driver. We pivoted here at the beginning of 2019, and so as a startup, we're growing, and this is kind of our major kind of focus as a product right now. In terms of fundraising, last year in the middle of Corona, we announced our Series B. So we were negotiating this in March and April, even though we announced in June. And so really kind of at the crux of a lot of uncertainty, we were able to, thanks to our backers, kind of make it this far. After that, we were kind of featured in, top next 100 unicorns, Toyo Keizai. We announced a partnership with Mitsubishi Real Estate. So, the largest real estate developers in Japan, in one of their press conferences towards the end of last year. And we've put together a pretty strong team from a lot of other different kind of companies, both startups and large corporates across Japan. And so a lot of kind of diverse backgrounds of different types of experiences, a lot of experience in marketplace businesses as we are a marketplace as well. Really thrilled to kind of be working with a talented team. And my background, as Kazuki mentioned, is that of an engineer working in finance and kind of applying myself to solving different types of problems and challenges as I worked there from, both as an engineer to doing sales trading as well. But just as kind of high level way of introduction, hopefully that's suitable. I'm happy I can talk for hours about the business, obviously, and what we're doing. But today, hopefully we can kick it off with some good conversation and tough questions later.
Thank you very much for your introduction. So before getting into the funding discussion, probably I would like to hear about your little bit of your background and how you came about starting a business in Japan. Can you describe how you got interest in Japan and actually started the business?
Sure. So, I mean, the short version is that we started a business because I was in Japan, right? So it's not like, I want to start a business. Oh, Japan looks like a good opportunity. I'm going to go there and start a business. I think Japan is a great place to start a business, especially a startup in this day and age, given there's not so much competition, compared to other developed markets. There is ample access to kind of funding, if depending on what you're doing. And there's a lot of talented people in the market, even though not as many people have experience with the startup journey. But that's increasingly changing, right? And so we started Zehitomo because this was the challenge, the problem that we wanted to solve in society, in the economy. And for myself as an engineer, I've always thought of myself as, solving different problems, right? And, as an engineer, you solve problems logically with zeros and ones, right? And as you move into business, you have to solve different kind of problems that involve people, right? The worst. But, as you solve all sorts of kind of nonlinear problems in business and kind of organization, for me, working in finance was a great way to expose myself to a lot of different types of challenges and problems that was moving the world in many different ways. And so when my first daughter was born, and just kind enough to let me use her room for chatting this evening. So when I took a moment to kind of take a step back and realize that, living in Japan we're all really lucky to be here, right? It's one of the best places in the world to live. Trains run on time, it's clean, it's safe, right? Best food in the world. So many wonderful things that I would never want to change in Japan. But at the same time, there's a lot of things that are quite inefficient, right? Where, a lot of societal expectations of my wife to do something incredibly inefficient, just because that's the status quo, right? Or, if we want to move, if we want to hire a photographer for something, or for our wedding, if we want to hire, our photographer or a DJ, or when we wanted, one example I often give is, even the window over there, as well as a couple of other windows for our room, we wanted to soundproof the glass because we're near a freeway, right? And we're near like a train line. And, we go through the concierge at the, large developers, mansion in Japan. And they're like, oh, yes, of course we can do that. And they go through their preferred vendor, someone who comes down from Osaka to Tokyo to measure the windows, right? And, a month later, we come back with a quote, right, for around 40 grand US, right? 400 man. And it wasn't just that window, there's a few others. And I'm sure it would have been a great white glove experience, but was that really what we needed, right? Was that really the solution that we needed to wait a month for? Is that the best option in the market? And so, for me as a kind of stubborn foreigner who just wants to make the best decision in any given circumstance, me and my wife, we kind of, looked around the market. We tried calling up places one by one, and they tell us, oh no, we don't do that type of work, or we don't carry that material, or we've closed. And we ultimately, find this small 3-person shop. I live in Kanagawa. That, a few friends, they built out their own company. They split out from this larger company to focus and do what they're passionate about. And they specialize in soundproof glass, right? And they said, yes, we specialize in that. We have the exact same product that you were, offered in your other thing, and we can do it for $4,000, including the installation and including everything else that was involved. So 1/10 of the price in a fraction of the time. And we were thrilled. Like, wow, why is it so hard to find these people that can do this for us? And what I was blown away by was when they came and they delivered this service, and it was great and it was easy. They were thrilled to have met us. Like, we started our business and they're looking for clients, right? And traditionally it goes through, it's not like online and somebody matching and saying, hey, great, like, can we do this? And it's not very, efficient right now, right? The market is very offline, very fragmented. And so, starting Zehitomo, it was more of a consumer feeling. It's like, we want to build like an Amazon for services. Everything just be as easy, right? One click, get it done. But have realized that more of the problem that we're solving is actually for the small businesses in Japan, for the freelancers in Japan. How can we help them? Some of the best services in the world, right? But the ability of professionals to be able to market themselves and promote themselves, right? There's can often be a gap there. And so for us to help the professionals level the playing field, right? Build a fair, efficient marketplace, right? Where pros who are good at what they do can be rewarded as such, and consumers can get their jobs done that much more easily, was really going to be a win-win. And, solve some of the largest problems, not just as a consumer, but for the economy in Japan. Looking at GDP being made up of services, as I had in my first slide there, looking at productivity being dragged down by the services sector. And so, Corona has accelerated a good amount of that last year, right? DX is now a theme in Japan. And, small businesses in Japan compared to 10 years ago, maybe the average plumber is still using a fax machine, even if the consumer is searching online. But now the average plumber or komuten or anybody else understands and knows that they need to kind of transition and figure out how to grow their business online, right? And so even if the intent is there, the tools and the resource and the know-how hasn't been there. And so we're trying to make it as easy as possible for professionals to come online, grow their business, and get more business done for the consumers who need them.
Yeah, thank you. Thank you for sharing that. Yeah, I agree that Japan has the very low productivity, and yeah, most of the companies in Japan still like using physical like printed papers in the business, and business is moving very slow and in terms of speed. Yeah, so yeah, I agree that. So yeah, you said you started the business in Japan because you are in Japan. So were you born in Japan, or
No. Yeah. So, all right. So go back to your earlier question. Yeah.
Mhm.
Started the business because I was in Japan, and as a problem solver, love everything about Japan, but want to solve this, right? For myself, for my kids
Yeah,
to grow
yeah,
up in Japan. In terms of, I grew up in the US. So I was born and raised in New York, went up to college in California, where I studied computer science. And I graduated in 2008. So 2008, computer science, California. All my friends went off to Silicon Valley, right? That was the thing to do at the time. I was the weird one that came to Japan and started to work in finance right when the Lehman shock was happening and everything was falling apart. And, I think for me, I did some internships in Japan. I fell in love with the culture. I had reverse culture shock coming back to the US. But there's a lot of things that I was kind of passionate about that Japan did really well. Early on, I was fascinated with AI, right? At the time, you applied AI the most in games, right? So my high school days were very geeked out, building AI in the computer game that was going to play myself at like 3 o'clock in the morning on the computer that I built, right? And so the biggest industries for video games were California and Japan, which was part of the reason I went to college in California and started studying Japanese. Ultimately, my interests, evolved as kind of, I had kind of more awareness of different things in the world and realized I wanted to kind of challenge myself and learn more about business and finance. But yeah, my passion for Japan remained especially after doing internships and kind of coming out here and visiting here, and meeting my now wife here as well.
Oh, I see. Thank you. Yep. So you have the both like a startup and corporate working experience, right? Is that transition very smooth, or was that hard?
Smooth. I think there's nothing smooth about doing a startup.
Yeah.
I imagine even if you're going from one startup to another startup, right? Like the whole idea of starting up is there isn't anything to start with. And so like you kind of have to thrive in that chaos or that lack of structure, right? And that's where the opportunity and the excitement comes. And so, I think there was no change in terms of like excitement or passion or like, being driven and kind of, things that you've learned over the years. But it's a very different environment. You go from being kind of starting off in a high performance environment with a lot of talented people all around you every day, to, working out of kind of shared spaces at the beginning, right? Working out of, home, trying to convince anyone that will listen to you to help, right? You're like, hey, we can't pay you a lot of money, but we've got this dream. Do you want to help make it happen together? And, people who join early on, right? There's the equity, right? And there's, people who understand that kind of risk reward benefit are kind of better off for it. But in Japan, the concept and understanding of equity is also still not as mature, right? A lot of companies don't actually give out equity that vests the same way as it does in Silicon Valley, right? Maybe there's, lockup in that until the company has IPO'd and 1 year has passed. Even if you've been with a company for several years, you can't vest anything if you quit, right? Or you don't keep anything, right? And so, we've taken much more, our philosophy has been benchmarked more on kind of Silicon Valley when it comes to startups, although our environment is very much in Japan. So trying to take the best of both worlds. But equity, best practice, definitely from the West. We do 25% equity vests a year over 4 years. And so for everybody that's joined until now, it's like, hey, yes, we're a startup. We can't offer a lot of these things, but we're building. This is our vision. This is how we're planning to get there. These are the challenges that we need to solve. Come be an owner of the company together. And yeah, building a team, trying to understand those competencies, understanding yourself, like every day, every week, every month, like completely different challenges, completely different things to kind of learn. And so, just continuing to, reevaluate what's important, knowing that you can't do the majority of things that you want to do. A lot of different skills that you need to learn, a lot of lessons. Yes. And I feel like every year I better understand why investors value second, third time founders as they do, is because there's a lot of things you have to kind of learn and go through. And so hopefully, these types of chats can be helpful for the community and at least, some of the mistakes that I've made or challenges that we've faced, some people can have a slightly less hard time, then that would be good.
Yeah, I assume there's lots of challenges in both financing and business. So yeah, what were the like gaps or big difficulties when you do the business in Japan? Like so in general, like Japanese customers are very like has very high expectation
Sure.
for the service, and the I assume that the service acceptance it's very hard, right, for Japanese customers.
Yeah. So I mean, there are obviously differences, right? Like if you're gonna look for, behaviors around kind of allowing people into your home to do like, housekeeping, et cetera, right? There's like a very different rate in the US versus Japan, having high expectations around, service and stuff like that. That's all there. But fundamentally, the consumer behavior in Japan versus the US is not nearly as big as the difference between the professional behavior, the small businesses behavior. And I say that because in US and in Japan, people are Googling for what they need as consumers, right? And they're going to kind of go through that experience. And the professionals is where it's different, right? Where in the States, you had Craigslist, you had Yelp, you had a handful of other different kind of horizontal and vertical platforms. Whereas in Japan, you didn't have a lot of that. And so, to kind of build that next generation experience, like we're able to kind of, it's not like we're doing small iterations on something else and we need to kind of have something finessed. And like our product today, even today, like, is so far from where we imagine, right? And where we want to build out to. And so our users right now, like super grateful, like for dealing with our current experience, which has gotten a lot better, but it still has so far to go. But I think it's very much relative to the market, right? So if the current experience is horrible, if we can be so, that's actually like an amazing experience. Even if the amazing experience that we're looking to build is very different from what it is today. And, I think it's, a balancing act, but the bigger piece for us has been more around the small businesses and helping them transition online.
I see. Yeah, that's right. So so you said the equity financing is the best in the US, but you are getting a finance basically in Japan, right?
Yes.
So
Yep.
so did you seek the finance out of Japan, or the seeking the funding only in Japan?
Just to clarify one thing,
Yeah.
what I was talking about before was kind of equity incentives for early members.
Oh yeah.
Building a company, like, understanding kind of that risk and reward and the kind of human capital, right? I think there's, financial capital. There's also human capital in Japan is really what's kind of starting to evolve right now in terms of startup, relevancy. And so, in terms of those best practices, I think also in terms of fundraising, there's a lot of good practices in the US as well. And the markets are more mature in different ways, with the M&A market as well. But, there's also some things that have gone a little bit crazy, depending on, capital has become more of a commodity in some senses as well. So there's, which isn't a bad thing. But in Japan, we're building a business in Japan. And so when I think about investors, we're looking for people that can help us achieve our goal that much faster. And so conceptually, every time we do a fundraising round, and there's always different circumstances, right? It's not like every time it's like, we have our pick of the world and we'll do XYZ. It's, as a startup, you're okay, 6 months and you need to fundraise again. You need to, it's, depending on the state of the business and how many problems you've been able to solve, you have more or less options. But ideally, and especially the early days, you can't really change the people on your cap table, right? So say like hiring somebody is one of the most important decisions you can make. And for growing the business, that's absolutely true. That said, worst case, and this is a really bad case, is, someone can leave the company, right? When it comes to an investor, that's not the case. And so it's really important who's going to be on your cap table, that you're going to have a level of trust. You're going to be able to see out the vision, and you can expect that, hey, we're going to have a 10-year relationship, right? Maybe it's less, right? Maybe hopefully the, 5 years, 7 years, depending on the stage, whatever it is. But assuming that you're gonna have a 10-year relationship and that you can't change that later, that level of trust is really important. And then also understanding, hey, if I'm gonna be giving up, say 10% of the company, right? We're gonna become, we're gonna dilute ourselves 10%. Are we gonna grow 10% faster by having this investor on board, right? Like, what's the purpose of the fundraising? And I'd say especially early stage, it's easier to kind of think in those terms, because the valuation doesn't really make so much sense when you don't have revenue, right? It's more of like, different factors. And so thinking like, no, I'm worth, 5 million versus 10 million versus whatever it is, like in the seed days, it's not like, it's more like what percentage of the company do I want this investor to own, right? If this investor owns 5% or 10%, are we going to grow 5 or 10% faster, regardless of any capital? And you'll find that I think with a lot of the higher caliber, the top tier kind of seed stage investors, is that the answer is yes, right? If you would say in an extreme scenario, you would say, hey, I'll give you 5% of the company. I don't need anything, like I don't need any cash in return. But like by having on the cap table the kind of, the leading indicators for future fundraising, the introductions they can make, the pattern recognition that they have with other founders, and the advice they can give you, are going to grow 5% faster or not, right? And if the answer to that question is yes, it's not so important to kind of worry about the terms and all those other things, right? Then the money that comes with it that helps you actually then, grow and kind of realize things. It's really when it comes to more later stage financing that, it becomes this more of like a business, and you can start to see liquidity on the horizon, that it becomes more of a financial transaction.
Okay. Yeah, that makes a lot of sense. Yeah, I think. Yeah. So so what's the startup ecosystem like? I mean, from your viewpoint. So what are the things that the Japanese investors are looking for? Of course, the returns and of course returns, but compared to other investors in other countries, when you talk to investors in other countries, did you find any difference between them or?
Sure. So I think, there's a number of different types of investors, right? And so maybe, an angel investor in the US and Japan maybe isn't as different as like a corporate venture capitalist, right? Or even just within traditional VC, I think in Japan you have, two flavors, right? You have the flavor of more traditional salaryman VC, right? Where they don't take any risk, right? They don't benefit when the company does really well, right? And so what they're optimizing for is looking good, right? And performing well, right? And like making sure that you don't fail, right? And for them, like if they could invest in 10 companies and one company would have a 100x return and the other 9 fail, versus they could invest in 10 companies and all of them provided a 2x return, they would probably take the latter, right? At least when kind of making decisions, right?
Mm-hmm.
And so I think it's really where, again, it comes down to the incentive structure. But that salaryman VC style is quite different there and is much more risk averse, typically, and there's many exceptions. And I think the VC more and more funds lately, and it's becoming more mature. But when you have investors that are, bought into their fund, that, benefit, have the carry, right? And have their eyes open to kind of how things work globally as well as locally, then you have a quite strong combination, right? And so the investors that led around, 500 startups now, Coral Capital, is, people that I trust that work together actually at JP early on, that have that global lens. Start off as 500 startups, right? A global seed. And Digital Garage, has their offices in Silicon Valley and New York as well. I met them originally in New York. And so I think having that global perspective, but also understanding local, and then having people that are making decisions that are actually, have that carry, have the vested interest. I think that's where, those are some of the most important things to look for. And depending on what you're looking for in the investment, of course, but as a VC, I think that kind of separates a good amount. And it's not like the other VCs aren't able to add value. It's just maybe as a lead investor, the way that they would think about the deal is a little bit different. And the number of people that can actually really make decisions are much smaller than the number of people involved with the funds, obviously.
Mm-hmm. Okay. So when you say salaryman VC, is that a corporate VC, like CVC, or is that even the corporate?
I would maybe refer to, and I don't know if this is a standard definition, but I would use it to refer to anybody that they carry on the fund. So basically, if your performance does well or not, their take home doesn't change. They're employed by the company to provide services, right? And I've met a lot of people that still do that and still care a lot and are able to do that, and they'll probably go on to start their own funds where they're able to kind of be incentivized as such. Corporate venture capital is then a little bit different in terms of what you're looking for. And often it's, there's the financial returns as well, but it's more like, the business synergies and what you're looking for from the CVC is different from what you're looking for in a VC usually.
Mm-hmm. Okay. Yeah. So in general, right, when you look at the startup ecosystem around the world, Japan is still a small, right? So in terms of the ecosystem.
Yes.
So what's the advantage or disadvantage to getting a fundraising in Japan? Or what would you recommend to the entrepreneurs from overseas entering to Japan, or? What's it? Yeah.
So I think it depends on the purpose, right? Like in our case, we're building a business in Japan to serve, first and foremost, residents of Japan, right? And so there was a lot more value that we can get from investors based in Japan, right? Whereas maybe if there was an investor based in, another country that doesn't have knowledge of Japan, even if they would invest, like the value that we would get from them beyond the capital goes back to my earlier point, right? Like, would you want this person to be a shareholder regardless, right? What value are they going to bring to the company down the line? And I would just kind of go back to that as kind of the core framing. And if you're building something in Japan, there's, yes, compared to other countries, maybe, percentage of startups and stuff is much less, but there's a lot of money in Japan. And there's more funds than ever in Japan. So early stage starting off, there's, plenty of, more and more angels, seed stage funds than ever before. And there's starting to be more and more later stage funds as well that are available. I do think there's a little bit of a gap in the market between the kind of seed stage where you're investing in the team and the dream and the later stage where a lot of investors are maybe looking for like a smaller return into an IPO. And there's not as many investors that really understand the business and how to drive that business, through its next kind of 10x, 100x, not just for that kind of small kind of like pre-IPO round. Those investors are much more rare right now. And I think that's where starting to see some more international investors, start to look at Japan once it becomes interesting for kind of a growth round. Although a growth round by definition overseas is a little different from Japan in terms of ARR, et cetera.
Okay, great. Okay, so I think we covered the past of your business in the current situation. So I'd like to hear about the future plans of your business. So what are your plans in Japan or even outside Japan in terms of the business?
Sure. So every year we focus on 10x growth. We say, okay, what is our bottleneck for growth? Understanding where we want to be at the end of the day, how we want to win in this market, how we want to solve local services. And we say, okay, what is our current bottleneck to doing that? And whatever a bottleneck is, we focus on 10x growth that. So, earlier on, it was like, okay, how do we acquire demand? And we invest heavily in SEO and we 10x demand, right? And then it's like, okay, how do we make our supply work, right? Manually bidding on jobs. Professionals in Japan weren't as aggressive in terms of growing. It's like, okay, we need to, automate this process and kind of build out algorithmic matching for the professionals, right? And so then we 10x our supply. And it's like, okay, now how do we actually scale this with paid marketing so that we can grow and we kind of focus on our unit economics, right? And so, and one salesperson's KPI and being able to kind of 10x that. And then the organization is like, okay, last year we went from 2 to 20 salespeople, et cetera. And so every year is slightly different things that we need to focus on. And we focus on 10x. Only really from last year, we started kind of be able to focus on, revenue as all the pieces came together and be able to kind of drive and look at the top line. But yeah, going forward, this year, next year, our market is so large and so untapped. We're very much focused on, how we can not just build maybe to look at another way, in the US alone, in our space, with our business model, there's multiple billion-dollar players. None of them have won the market. None of them are looking overseas because none of them have won their local market and because the market is that large and still offline. And so I imagine in Japan, there will be multiple billion-dollar players in our space. But, there's always a large difference between number one and number two. And being a billion-dollar player, our plan over the next few years is roughly 100x, right? If we can 100x and be a billion-dollar business, that's still not even going to be 1% of the market, right? It's that large. And so looking at then, okay, how do you then 10x, 100x from there? And so within Japan alone, over the next 3 to 4 years, I imagine that'll continue to be our primary focus. If we can win the market in Japan and we can really truly solve this space, then I imagine overseas would be more via M&A. than an organic entry.
Mm-hmm. Okay, good. Yeah. Just out of curiosity, your startup is kind of a tech savvy and AI implemented service. So, as you know, like Japan has few like AI engineers. Like in general, like lacking engineers. So it is one of the biggest problem in Japan. So. I guess recruiting engineers in locally or from other countries.
Sure. So I'd separate like AI engineers from engineers in general. I think, in this day and era, like using AI does not mean you need an AI engineer, right? I think that, we're not building the next TensorFlow. We're not trying to build the next thing of beyond machine learning. We're trying to apply what's already out there to our thing. And so we need people who understand data, right? And who understand kind of how to kind of interact with these different things and be smart about it. Like we don't need to compete for that type of talent. In terms of engineers, I think it comes down to like different things. There's the stack, there's the culture. We're much more of an international culture and team. And so, for our engineering team, we do have, both Japanese and foreign members, but we have been foreign heavy. In terms of people that find working at a startup in Japan attractive and working at maybe a company that has foreign management and has more foreign ideals and best practices, as opposed to a company that says we're recruiting foreigners, but we're actually very Japanese management, right? And so, I think we don't really have a preference around there. If anything, I imagine that we want to have strengths of both. We don't want to be an only foreign engineer organization, even if it's slightly easier for us to attract that types of talent. Because we're building a platform in Japan, right? And we need to kind of understand that and be there. And so, like all the foreigners on our team all speak some casual, Japanese, and the Japanese members all speak some casual English as well. But the most important thing is really the values that we have. And I think that, the difference between culture and values is bigger than any difference between language, spoken language. And as engineers, we can, you can write JavaScript, right? That's the the common language from the technical perspective, and then our culture is more the common language from from our kind of interactions. But in terms of building out the team, I mean we've seen a number of different channels, and the market in Japan is much more dependent on kind of like recruiters and relationships and whatnot. And I think compared to Silicon Valley, many more engineers prefer something that's more safe. Even if the idea is that they want to take risk and want to be kind of excited about those things, kind of feeling the responsibility around family and thinking that, okay, I need to kind of go up through like a manager route and stuff like that. So I think like, we partially scream by that with our stack. But there's a lot of really talented Japanese engineers that from a global standard are very underpaid. I think that's starting to change, right? There's more and more opportunities for talented engineers.
Okay. So from the financing perspective, so you just said at the beginning you're about to close Series B, right? So is there any like a future milestones what you are targeting at, like another funding or IPO or anything? Yeah, if you have, yeah.
Yeah. So I mean, we'll probably do another round, but right now we're well capitalized and we know how to drive revenue growth. And so our challenge is, for the first time like ever, is not around fundraising and is more around kind of like growing the organization and kind of bringing us to the next level. And so, a lot of investors in Japan as well, and people I talk to, ask about IPO, right? And we'll probably IPO, right? Personally, I could care less about laying that out as kind of like as a target, right? As I mentioned before, how do we grow 10x each year, right? If doing an IPO or doing a fundraise will help us clear the bottleneck for us to grow 10x, then we do that, right? And a good reason is, okay, if we're going to run out of money and we need more time, then okay, we can fundraise, right? To kind of buy ourselves time out of necessity, or we can fundraise to say, hey, we want to hire more aggressively, or we want to invest more in marketing. And that's what we need to do to kind of grow 10x this year. For an IPO, like doing it at like a small stage, as a lot of companies do, this is like, a couple $100 million in Japan, is for us, given the size of the market and our ambitions, would probably slow us down if we do it soon, right? And so it's more around like, as that makes sense as an appropriate, way to raise capital and kind of bring awareness. I imagine would be, probably another different round of funding would come in before then.
Okay, thank you. Yeah, that's very, very reasonable. Okay, I think we are getting a couple of questions from the audiences. Yeah, probably just move on to the Q&A session. So probably start from this. So question from Brian. I noticed quite a few corporate venture capital, CVC, funds which invested in Zehitomo. So could you share a bit more on how you managed to convince all these corporates to invest in Zehitomo's vision? And how was it like pitching to all these CVCs?
Yeah, thanks, Brian, for the question. So in my experience from pitching CVCs and kind of getting to the point of actually investing, there's been largely two patterns. One pattern is like you're looking to actually build a business together, right? And there's a synergy. So for example, when Mitsubishi Real Estate invested in us last year, and we subsequently announced kind of a press release that we're building this out, we're doing something together, was with that common goal in mind, right? And I think, a lot of startups often talk to CVCs and say, hey, like we can make this thing work out, but it's not really the main focus. And honestly, that ends up being like a big distraction, because going through that process and actually getting through and doing like a proof of concept with the corporate so they can kind of commit to the investing process, it's a much more lengthy process, right? It involves a lot of stakeholders, and it's not so much looking for kind of a return on investment, but more looking to kind of do something that can kind of, for that company be a competitive differentiator, right? Or be something that kind of helps them innovate and grow. That's kind of one style. Another style is maybe, from the top, right? The CEO, has a different mandate, right? So instead of it being like, hey, we need to kind of build out synergies, it's like, hey, like for us, having an ecosystem of startups that we're involved with, due to our strategy, that's actually going to be beneficial, right? So, Vector is one of our investors. They're more of like a PR and IR company, right? And so a handful of companies that are going to go through that, like the IPO process, that's good for them, right? Because we can use their services, right? Or if we're going to do marketing and do kind of large scale marketing, like, they can be there and they can be more flexible for us, and they kind of give us insight to help us grow. And they're willing and interested to take that risk as kind of their positioning and approach. And so, I think their approach may have, changed since then, but I think, sometimes where it's more just like the, understanding what the mandate is of the CVC. It's probably very important to understand if it's interesting for you to talk to them or not. And then the other case kind of in line with that, where maybe there's not as much of a strong mandate, but like there are cases as well where it's kind of close to angel investing, where the CEO wants to invest. Maybe they're interested in buying you down the line. Maybe they're just kind of interested in kind of, some of the information rights that come with it. Where it's just kind of like, but instead of investing from their own pocket, they're investing from the company. And they have a way to be able to justify that or explain that to their shareholders. So those, I mean, that's going to be much the easiest, but maybe the value that you get is going to be different from when there's a kind of clear synergy or something as well.
Interesting. So is there so the first point, like a POC or collaboration with the Japanese companies? I think the going back to the earlier discussion, like Japanese companies are still like inefficient and not used to the POCs, the collaboration with outside the companies. So what was that, your POCs smooth, or was that very hard?
So we only really did that with Mitsubishi Real Estate in terms of kind of a proper involvement, and they're a very kind of large mature player that have made numerous other investments. And so, yeah, I mean, it took a good amount of time, right? We were talking to them well before the fundraising cycle about how we could build out a business together, the future that we imagine in Japan, and kind of how we can kind of, work together, to accomplish that vision, right? And, I think that's what then kind of culminated in kind of, okay, hey, let's pilot something out. As we were kind of getting towards the fundraising conversations. And then the business then pitching on our behalf internally to say, hey, we want to invest in Zehitomo because we want to accomplish this as our business, right? And so that definitely, takes more time, but it's a completely different value that we get out of that. And I think that one of the common pitfalls I see is that often, and I can understand this from the startup side, is like, we need funding. This corporate seems like they might be a good, like, they're investing, we should talk to them. And then kind of like forcing some sort of POC that isn't really core to the business. And as a result, there's a lot of companies that corporates have invested in where just like the synergies die off, right? And it's like, and maybe if getting a little bit of funding was needed to survive, then that's what it is. But oftentimes there's better ways to kind of raise that capital in kind of more effective ways. Than kind of like forcing a synergy that then ends up becoming a larger distraction down the line. So I just kind of watch out for that. But otherwise, I think like, I mean, there's a lot of corporates that have very large businesses in Japan. And if, you want to be careful not to have something where it's like, you can only do this with them and it's going to hurt your chances of doing things with other people. But yeah, and not all CVCs, do that and require that level of involvement, right? Some are more just looking to kind of, hedge their bets in the market as, you go out into kind of similar fields, right? And recognizing, hey, is a company that does this better than us in a tangential field that could be interesting to us in the future. Maybe we would want to buy them in the future or make an offer. We would only be aware when those conversations are happening or kind of gain that insight. And those are, much lower levels of kind of, due diligence and more kind of following the lead and it being something that the kind of leadership there are interested in. That's probably much easier in terms of a timeline to close on in the number of steps.
Okay, thank you. So I'll pick up another question. This is from Paul. Thank you, Jordan. At what stage did you obtain external seed funding from 500 startup and Quora?
Yeah.
I believe it's Series B from Quora. And then were there POC, MVP, or actual product in the market?
Yeah. So with Quora, that was our seed. And we did a couple, like a couple iterations of seed that we announced all together in July 2017. And so because they invested in us, they were able to then introduce a handful of other investors that led to kind of a quite successful kind of pre-Series A, which is what we kind of announced together. But yeah, when we first did those conversations, we had I don't know, like in our case, how we would define POC versus like MVP, but like, I feel like what we're at right now is MVP. Like when we're like, we have significant platform, like transactional value and that we're delivering and, hundreds of thousands of like, users and kind of stakeholders every month. But like, it's, compared to what we're trying to do is very much kind of an MVP. So compared to that, yes, like we hadn't put out a press release that we were launching a service. We had kind of probably closer to kind of a proof of concept that we were like beta testing internally. But we had this vision. We had, some early team members that we're starting to put together. And when we first spoke to them, it was like, okay, it's two Gaijin doing this. And they gave us some feedback. And they ended up introducing to us our first senior sales member that joined us. And after that person joined us, then they decided, then they invested. And so I think that especially early stages, it's never like, it's not like a yes or no. It's like a yes or a maybe later. But I think the maybe later is obviously from the investor's perspective, keeping their options open, but trying to understand what they're looking for, right? And there's different investors looking for different things, and you want to find the investors that you think can share the same vision as you. But in our case, it made a lot of sense. Like we were like, we didn't have any any full time. It was myself, James, actually I'm not sure if Tin is there, our first employee engineer, and then some interns and part-time members that were working with us, right? And so they made it like actually meaningful introduction to us, and followed by that they kind of saw our progress over several months, and felt the conviction at that point, even though it was still a lot of risk and continues to be, that they wanted to kind of bet on us as a team in terms of the timing and in terms of the market.
Okay, thank you. I think I will pick up one more question. It's from Megan.
Sure.
So what was the factor that caused you to change the priority for Zehitomo from funding to something else? So how do you identify it, and when you are able to focus on other elements that are not funding related?
Yeah. So it's not like you focus on funding because, like, I mean, in the early days, you're focusing on funding out of necessity more often than not.
Yeah.
Right. It's not like, oh, yes, we're a profitable company. We're riding our wave. Oh, yes, it would be nice to be able to just kind of, raise a large amount of money. And so we're going to then focus on that. It's usually not the case, right? You're going through that J curve, right? You're spending a lot and trying to, betting on a lot of different things panning out, right? And there's a lot of things that can go wrong, often a lot of things that do go wrong, and trying to double down on the few things that go right. And so, early days, we were doing some level of fundraising every 6 months, right? We announced them together as kind of rounds. But that was like half of my time was like fundraising for the first few years because we needed to survive. And the other half of the time is recruiting for people that can actually solve a lot of the problems. And then the third half of my time was then like actually getting involved in solving the different problems that we needed as you're 10xing through the different stages to build a fundraising story that we needed to kind of get there. So I think like the number one time that you're not focused on fundraising for me has always been like the day after the money's in the bank, right? Money's in the bank, that's when you can make the most change, right? So you're like, okay, money's in the bank, maybe that's going to last you 12 months, right? So maybe in 6 months, you need to start thinking about fundraising again, right? In that case, you have 6 months to kind of build a story, right? And so all of the biggest changes generally make right after the fundraising when it comes to kind of resetting the organization, making bigger bets on certain things, or kind of like hiring key roles. All of that kind of big stuff happens immediately afterwards. And then as time goes on, like the amount of risk that you can take that could impact your success in the next round start to change, right? Depending on the progress that you have, right? And like, if you're pivoting partway through a fundraise, that makes like the story just that much more complicated, right? And then if that means you're going to run out of money, that's a pretty high risk. And so I don't know if that makes sense as a way of thinking about it, but the biggest changes ex fundraising are immediately after the fundraise, and then trying to connect that all as a story as you best can.
Yeah, absolutely. So are you dealing with these fundraising by yourself, or is there any like a CFO like person in your company, or?
So I drove the fundraising so far. Hopefully before we ever do that again, we'll have a CFO. But I think that, early on what investors are investing in is the team, right? Is the leadership, right? And it's not like, when you have, revenue and you have predictability and stuff like that, then a CFO could play different value. But early on, it's an evaluation both ways, right? And so I drove that, and I was very fortunate that, our lead investors also were very supportive, right? And so that's where I say like the different value that was added. So, Coral Capital or 500 then, worked very closely with me and say, okay, like, how should we build out this story, right? How should we do this? And kind of how should we talk to different investors, right? And they introduced a lot of places, right? Talk to places on our behalf, right? To kind of get excited about it. And so there was a lot of teamwork there with our lead investor. And then lately with this last round with Digital Garage as well, after they decided to lead, they actually helped and sat in on meetings where we were kind of, closing with different followers, right? And saying, hey, we're leading this, we're bullish on this, come on and join our round, and they would introduce. And so I think that's the value of having kind of like, good investors that you can trust, that you can rely on, and you can feel like it's a teamwork, right? And that you want them to be an owner of the company because it helps you grow that much faster. Really, at least for us, paid a lot of dividends in the fundraising process. And we wouldn't have been able to make it through a handful of those stages, I think, otherwise.
Yeah. Okay. Thank you. Yeah. Actually, there was one more question. So quickly. So how do you approach the conversation of non-exclusive involvement with a Japanese company?
I think just the easiest thing is you're just upfront about it, right? Like this is, in our case, is like, this is our goals. This is the future that we want to build. If we do something exclusively, we can't do that, right? Like we want to be, a transparent market, right? And so there's things that you can kind of negotiate on. You can say, hey, like if we're going to do something, we'll give, like, we can do it with you first, right? Or, we can do our pilots, we can approve things in the market first. But, it's different for different startups in terms of the businesses that you're going after and the kind of goals of the company. In our case, we're trying to, democratize the platform, right? We're trying to make it fair and efficient. And so if we have, preferences on there, then we can't achieve our goal of doing that, right? And so Yeah, I don't know if that makes sense as kind of a balancing act, but and it probably depends a little bit on the business and goals. In some cases, you may have to make a decision, like who do you side with, right? And there's different ecosystems, the different large Japanese players, but you can take that as either, hey, we're going to partner with these people, and hence the other large competitors are going to probably invest in competition, or you can say, hey, these guys are doing it, so everyone else should do it as well. And I think we're able to do that latter effectively. Sometimes it means, inviting that competition to the fundraising itself, right? Saying, hey, we're going to take, an investment from multiple competitors there, right? Or if you want to do something alone, then, there needs to be kind of a premium on that. But surprisingly seen, competitors, investing in the same company in different spaces. Before. So as long as it's logical, I think they need some way to kind of rationalize and explain it internally. But it depends on what they're looking to get out of it, right? If they're looking to kind of,
Yeah, actually, that's the very great way to convince and push Japanese companies. So like everybody's doing this, or your competitors doing this, so Japanese companies tend to follow them. So for the kind of digital transformation. So every single company in Japan is now doing that DX. Because everybody's doing so, it's kind of a part of Japanese culture. So I think it's pretty effective. Yeah. So lastly, so I think many entrepreneurs and the people who want to start a business in Japan are watching this and will be watching this because this video will be uploaded on somewhere else. So can you give a piece of advice or messages for the audience?
Number one thing that I've continued to learn is just focus, right? And so I talked earlier about, focusing on like what is our biggest bottleneck for scale and how do we, 10x that each year, whatever that biggest bottleneck is. And I think doing a startup, at least in our case, so many things that we want to do, so many things that we want to solve, so many customers that, we want to make happy, that we can do something better for them. But you can spend infinite time in kind of like in the present problems. But when you scale, you face very different problems, right? As you 10x, you have a completely different problem set than you did before, right? And a lot of those problems go away and you have different problems that come up. And so, I think just kind of avoiding the temptation to solve everything and kind of understand where you're going and what's the fastest route there. And I think it comes back to, what I mentioned at the beginning in terms of investors being a little bit more, risk off in Japan traditionally. And this idea of, if you can, press a button and you make like, 100 yen on it every time you press it 100% of the time, or there's another button you can press and you can make 100 million yen, like 1% of the time, right? Like you want to be pressing that other button, right? You want to be taking those kind of, higher leverage risks that aren't all going to pan out, but are going to lead to the kind of disproportionate upside reward. And investors that do that are great. And they're the ones that have, over a larger portfolio, the larger rewards. But as founders as well, like we need like very finite resources, right? Not just capital resources, but our time, right? And our team, right? And the human capital side. And so, just thinking how you can always leverage that to the max and what is the most important thing that you need to focus on and how you can kind of remove all other distractions, even if they're things that we want to do, is what I'd say.
Okay. Yeah, thank you very much. I think we are just on time. So thank you, Jordan, for sharing your experiences. That was very helpful for the audiences. And thank you, audiences, for joining this event. So yeah, thank you very much.
Yep. Thank you, everyone. Thank you, Kazuki, for leading.
Yeah. Thank you. Have a good night.
Okay. Thanks, everyone. Bye.
Thank you.